I get the icon in cornflower blue?
Hey everybody, welcome to episode 2 of Can I Get That Software in Blue? We hope you listened to episode 1 and enjoyed it. We got a lot of great feedback from listeners, and we're here to dive right into the next episode. We have a couple guests joining us today. First off is Kyle Schroeder. After graduating from the Wharton School, Kyle embarked on a number of different business ventures, finally hitting success in the men's grooming space with his beard, hair, and skincare company, Cremo Cream, which he recently sold to Edgewell. His latest venture is an energy drink company called Ninja Milk, which is in the top 100 sellers for the energy drink category on Amazon. He also closely follows the markets and actively trades equities and options. He's always talking about Greek letters like delta, gamma, and theta. I can't really tell if he's doing a geometry proof or reminiscing about his fraternity days at the University of Pennsylvania, but he did assure me they do mean something to people who trade options. He's joining us here today to help with our 10K breakdown on DraftKings. Kyle, welcome to the show.
Hello.
Welcome, Kyle.
We're also joined by Nick Drost. Nick Drost is a senior director of sales engineering and solution architecture at Elastic. Previously worked at large tech companies like Oracle and Salesforce. Nick, welcome to the show.
Hey, thanks for having me.
Right on. Welcome, Nick.
We always start the show by breaking down the 10K of an interesting company. Today, we're going to be talking about DraftKings, and Kyle's here to help us today, and Nick as well. Kyle, I thought maybe we'd start this conversation with the fact that DraftKings went public via a SPAC, and I thought you might help us explain to listeners what a SPAC is and give your opinion on them.
In layman's terms, it's a blank check company. It's sort of a backdoor IPO. So the way IPOs work, you have to file for an IPO, you go on your road show, very traditional. Most of the companies you guys worked for, they IPO'd in a very traditional way. SPACs have been around for, 10, 20 years. They've been around forever, but they're unique in the fact that they start as a blank check company. So when you think about people just raise money based on their reputation, SPACs, they start trading at $10. And so you basically say, I'm going to have X amount of money raised, then I'm going to go find a target. And I don't know, do you guys remember the name of what the SPAC was that bought DraftKings? I don't actually.
Diamond Eagle.
Yeah, right. So they usually start off with based on the bank, based on whoever that finance guy or person is. And so Diamond went out, bought DraftKings, and DraftKings became public that way. So instead of doing it the very traditional way where they start trading, the interesting thing is it's SPAC frenzy right now, SPAC this, SPAC that. Yep. Everyone's going to SPAC something out. Rappers have SPACs. Everyone has SPACs.
I don't have a SPAC. I need to get me a SPAC.
Yeah,
right?
I mean, is there the Russian doll of SPACs yet where there's a SPAC for a SPAC for a SPAC?
It's interesting to see how they've traded. The one that I was looking at was ACIC, and that was they basically just bought Archer, and so Archer Aviation. I mean, it's these moonshot things. So basically, Archer Aviation they're making these autonomous drone plane sort of things. If you look at ACIC, just the chart of it, they were a $10 stock forever, jumped up to $18. Now it's actually trading for $9.90, which is below $10. So the market is basically saying at first they thought, okay, great acquisition. But now that it's trading under $10, there's actually a chance that it might not happen. Maybe they think they overpaid for Archer. If it starts going too far below $10, the transaction won't close. And then all the people that gave the money to the SPAC get their money back.
Oh, okay.
The bankers don't make any money. I will say SPAC from an entrepreneur's point of view, they're actually kind of expensive when you look at what you have to give up to the bankers and stuff, but it's a way to get public. They're really popular right now. And one of the best examples of a SPAC that's done amazingly well is DraftKings, which sort of segues perfectly into our next subject, which is getting into DraftKings.
Perfect. That was good. Kyle, I do wonder about the VTOL Jetsons style transportation system, but that's probably another conversation for another episode.
I mean, I can't wait.
I can't wait either.
Those are the sort of things you do want to take a moonshot on. I just saw a deal come across my desk yesterday for a robot massager. This is like a whole unit that you walk into a room and you lay down, and it has these giant arms.
Oh, interesting.
They're not inexpensive. It's like $100,000 to have it installed, but evidently it's a nonstop masseur.
Yeah. Kyle, I have a question for you. So when you look at investing in companies, and full disclosure, Chad and I also have bought DraftKings stock just a little bit, but we're not going to try and pump up the company. Our opinions are our own. I'm curious, when you think about a company like DraftKings that is in a space that's highly regulated, like how do you decide whether or not it's worth the risk? Because even though DraftKings have lobbyists, and those lobbyists partner up with lobbyists from like other organizations like MGM, for example, there is the risk that online gambling does not become legalized broadly across the US, for example. So how do you think about that when you're trying to figure out if you want to invest in a company like DraftKings?
I think you just have to sort of, where are we going as a country? Where's the current administration? When you compare it to cannabis,
Yeah.
I live in Las Vegas, right? So
Right.
I'm in the thick of gambling. Gambling has always been regulated here. It's highly regulated, but California's had a lottery for how long, and that money goes to the schools. And we can get very esoteric in talking about whether gambling should be legal and lottery should be legal, and who it hurts most, who has the money to spare. Ultimately, gambling is pretty much as losing of a proposition as you can get. The only person that ever wins is the house.
Yeah.
And yet we all do it because we love it, right?
Yeah,
so
yeah.
it's sort of crazy to think about. But I guess to get back to your original question, I think there's no question when you look at what happened in New Jersey, what's probably going to happen in New York. States are legalizing gambling because they have deficits and they want the revenue. You're just seeing the dominoes fall. Exactly the same with cannabis. I mean, DraftKings is a very expensive stock when you look at valuations, right?
Yeah.
So you have to, if you don't think that gambling is going to gain larger acceptance, you probably shouldn't be buying DraftKings.
That's right.
It's built into the stock. So maybe that's an easy way to answer that question is you have to believe that gambling will continue to grow.
Yeah, I totally agree. It's like a momentum thing. Same thing with cannabis. I mean, it's not a week goes by, I don't see some article in my news feeds about gambling and or cannabis and how the government is thinking about opening things up. So, and you're right, like these deficits, what better way to solve those things than with weed and money?
I think they'll go hand in hand. I think 3 to 5 years out, I think we'll have national gambling, national cannabis. And because the other thing is, Wall Street, obviously, all the business people want to stick their hands in the cookie jar too.
Not just business people, but also former politicians and the former Speaker of the House.
Yeah, no, absolutely. Like, there's a lot of opportunity there. And once again, we can get back to the philosophical argument of whether it's healthy or not. I think it's inevitable.
Kyle, when you start researching a company to decide whether you're going to invest or not, what are some of the key frameworks that you use for things to look for?
I'm somewhat fundamental, but I'm also driven by, momentum and honestly kind of where I'm a bit of a contrarian. I'll be honest, I don't own DraftKings like you guys do, but DraftKings is a little rich for me. I've sold some puts in DraftKings. And so my thing is, when DraftKings will have like a big sort of one of those whoosh down days, you can get some juicy premium. The volatility in DraftKings is always really good.
Yeah.
So for me, I'm sort of opportunistic. It's hard for me to buy DraftKings, to be honest, and be like, this is going to be a company. I mean, if they hit all their goals, yes. But when you look at like the enterprise value of DraftKings and you compare it to Las Vegas Sands, MGM, Wynn, DraftKings enterprise value, and when we think about enterprise value, just for those listening, enterprise value is market cap plus debt. Right. So when you look at market cap, DraftKings is huge because DraftKings, I don't believe, has any debt. They have that convertible that just came out. So that might be classified as debt. But when you look at enterprise value, DraftKings it's not as big as MGM, but it's pretty close. And so when you think about MGM has casinos all over the world, like Wynn has casinos all over the world, and DraftKings is it's a bigger company than Wynn Resorts. They don't really own anything. Maybe that's the model that's what makes it so valuable between the fantasy, the betting. And I didn't realize part of my research, you can actually just plain gamble on DraftKings now.
Yeah, they have a casino.
I didn't realize they had I always thought it was all the fantasy and the betting stuff. But yeah, if I want to go play some slots on DraftKings, there you go.
Well, I think that they're also being valued more like a tech company than a traditional casino valuation, because they have this other software company that they merged with, SB Tech, that supplies underlying sports betting and casino technologies. Basically, they get reskinned by other casinos. And so they're really, I think that's part of their huge valuation is this, they're being treated more like a huge growth tech company.
Yeah.
Oh, without a doubt. And one of the and also to get back to your question, usually I'll try to grab some research reports, and you can usually do that through any of your brokerages. So, TD will usually provide the S&P report. They used to do Credit Suisse. I'll look at Goldman's just because I happen to be a Goldman client, and Goldman has like a 78. I think it's a $78 price target on DraftKings, and so when you look at how it's trading today, right? That'd be a really nice gain. But they're arguing that it should be valued more like a Netflix, Twitter, Pinterest, Snap, Peloton in that world. And so that goes, Chad, to your point that analyst is looking at it not only from a tech point of view, but as a social media or social network sort of valuation, where that's where they're getting that 78 price target, which is, when you look at the 10K, it's negative earnings, right?
Yeah.
They don't make money, they lose money, and that's what they want to do right now.
I thought it was interesting. I looked at the states that gambling is explicitly legal in, and it's all the Northeast states, with I think one exception. And then it kind of comes down and goes through the middle of the country. There's a little bit in the Bible Belt, but they're not in the biggest states like California and Texas yet. And so part of what I'm looking at is trying to figure out what their expected growth is in these states, how fast that growth will happen once they get into Texas, into California, and then how the competition will also be in there, right? It's not just DraftKings. They have other competitors. So it's just interesting to me to think, if you're valuing a company, trying to figure out, do you invest, and when you invest, as states legalize, assuming that's the momentum play, then how fast can they grow? And let's hope and pray that COVID's behind us and we don't have another one of these global pandemics that forces people into their homes again and they have nothing better to do. So that I think is also going to affect their growth as we grow. There's just more competition for attention after we get back to normal.
And when you look at total addressable market, which everyone always talks about, it is absolutely huge.
Yeah.
And that's sort of what you're talking about. Texas, California, the big giant states where you're going to a lot of sports, a lot of gambling. One of the figures that I read, they have that new partnership with the NFL. So 20% of NFL watchers want to bet on the games.
Oh, that's high.
Right? One in five people are saying they want to bet. And, and this is, when you get to your marketing, this is I forget, there's jargon for it, but these are people saying they want to. Whether they do is a different story, but they're right now saying they want to. And so when you think about that, that's why DraftKings has the valuation that it has.
DraftKings has a B2B business, which they sell gaming equipment and the software as almost OEM to other companies.
It seems like they partner with various, Indian casinos and stuff, and the casinos just reskin their underlying technology.
Yeah, so to me, that to me opens up the entire world as a market for them, right? And they did mention that they're entering into agreements with customers that are 3 to 5 year contracts. As that business starts to scale, I expect to see more and more of an enterprise sales motion for DraftKings, which I never would have thought of for a company that runs a gambling app. When you invest, actually, are you looking at consumer businesses, B2B companies, or is it just a mix?
I'm very agnostic when it comes to that. I'm sort of an innate contrarian. It's going to be hard for me to buy DraftKings up. I mean, DraftKings is up 275% over the last 12 months, right?
Yeah.
So good job to you two. I don't know when you two got in, but
I bought in early, but I only put a few dollars in. So of course it's coulda, shoulda, woulda.
DraftKings is a huge business. It's a real business, which it's a little different from what we were talking about before with Archer, which is 100 moonshot. DraftKings, absolutely. They have revenue. Do they make money? No. But do they need to? No. You're betting that they're going to be the largest online gaming company, and be it that back end stuff that we're talking about, front end, fantasy, casino, they're doing everything. They're going to be the next MGM, I think is what they want to be.
Yeah. I was fascinated when I was reading the 10K because in there they start talking a little bit about how they manage the business with the digital side on odds and things like that. So obviously they're running a business, so they're not going to expose their proprietary IP under the covers, of course. But they did mention the fact that they have to find that balance between generating income and allowing players to win. So it's fun to me to see behind the scenes how a company like DraftKings talks about that even at the highest levels. because it's a business. If you're great at gambling, I don't know if it matters in the digital space, because with ML and AI technology, the computers are getting smarter. And so increasingly you're betting against algorithms that are getting wise to any type of gaming you might be trying to do with the system.
Yeah.
And so I think that's going to be an interesting battle to see play out as people learn how these algorithms work, just in time for the company to change them.
There's so much personalization going on with tech these days. I wonder if the regulation will allow them to offer personalized odds.
I was looking at another company that actually lets you be your own, like you can take bets. I don't know if DraftKings allows it, but you can take bets against others. And so you kind of become your own odds maker, which is to me like, okay, if you have that skill, then you're willing to put your money where your mouth is, and then you can kind of be the casino.
Or they're just acting like the middleman to facilitate the proposition.
Correct. I think that company was called like Zen Sports.
One of the things that I read about that was interesting, well, they did talk about games that they license for their casino part of their website, and they pay for those via a royalty revenue sharing system.
Yeah.
So I was just curious if I could talk to somebody there, like why do they prefer that model as opposed to just buying a game outright or developing their own games?
Yeah. I mean, they did just make this acquisition where they're going to start creating their own content. There's no question that I think DraftKings wants to create their own content. It's kind of what Barstool Sports, one of their biggest competitors, is doing. I assume that's what that acquisition was about.
Yeah, I think so. They mentioned that they wanted to get more and more into that, and they've seen early success with what they've been doing. And so they want to build on that. I think the other thing too is it seems like based on the 10K, they build some of their own games and algorithms, but they also get those from other people. And I would imagine that with the engineering investment that they're making, which is over half the company now in like R&D and engineering, they want to build more and more games so that number one, they control the experience, but number two, they control the margins and how much profit making they can do.
Well, that's a good point. Will it be just a purely commoditized space? Like, is there a reason to prefer betting on DraftKings versus somewhere else other than the odds that they give you?
I think that's where the content comes in, like back to your earlier conversation. And the content, to me, the one of the things that I would think of why they would lease content is just time to market faster.
You think about how all the travel websites eventually got abstracted by the kayaks of the world. And I think the same thing could happen here if it hasn't already. Like folks that gamble regularly probably know better than I do. But if the world is all API first now for technology companies, I would imagine that DraftKings and others, Barstool, they have the same APIs. You could see this world develop where people start creating apps that let you bet in all three or all four or all five at the same time. And there, Kyle, to your point, like competition becomes even more fierce. And so that's going to be trickier for them because they could over optimize and all of a sudden people are winning way too much. And so they're going to need that ability to turn that knob really quickly to make sure that they're in line with their competitors and customer expectations.
Yeah. Yeah. No, it's a good point. And it's funny. You see the headlines every once in a while here in Vegas. I forget the last one that I saw, but it was something like, I don't know if it was a Kentucky Derby thing where someone got this crazy, trifecta, which was like the dollar down with $1 million payout or something. You'll see it when you read some of the 10Ks for some of the big casinos. Like sometimes they just have bad quarters because they're on the wrong side of those bets. But over the long term, they are going to win. The house always wins.
All right. I don't think I have any more questions on the financial stuff that aren't related to like directly selling software to these companies.
Kyle, thanks for joining today.
Have fun.
All right, Nick. So what we want to talk about with you, now that we're all a bunch of solution architects on the call, I wanted to have a conversation with you about how you use information like what we just talked about in DraftKings 10K to position value with a customer and potentially sell into that account. And this is something that I find not very many people do, but when you do it, it can mean the difference between success and failure, obviously, but also the difference between a small deal and a very large deal over, 3 to 5 years. And so one of the things I noticed in the 10K was that they were talking about the investments in technology that they were making and how big the R&D investment is. I'm just wondering, when you've read the 10Ks that you've read in the past, like, does the size of the engineering R&D investment in an organization and what they're focused on impact what you say and kind of how you position things with a company?
Yeah. Yeah. I mean, coming from selling enterprise software, large R&D budgets are great, right? It shows there's a lot of makers, if you will, making software. There's support structures around them. They need to run that on some sort of substrate. They're going to need CI/CD. They're going to need enterprise application. I mean, it's just,
That's right.
to me, it's awesome that those investments are being made, because I probably have something somewhere that is going to be able to help accelerate and help them do what they're doing.
Yeah, I agree. I think when I see large R&D investments in companies that specifically focus on that, one of the things I think of is like, how do they make decisions about what they build versus buy? And, we all know this from our experience, like companies that pride themselves on having this massively smart engineering team, they love to build software because that's what keeps them employed. And that's also a challenge when we get in there trying to sell them the value of something above and beyond what they're already doing.
Yeah, and I think it depends. Talking about DraftKings a little bit, knowing that their experience is going to have to be so curated to attract and maintain people to continually make bets on their platform. I'm going to guess that some of that is going to be bespoke software. It's going to have to be built, but along the way, that doesn't mean everything's going to be built. I
Yeah.
think there's stuff you pull off the shelf that's commoditized, and work that into your overall enterprise architecture for what you're doing, and building that tapestry forward.
So one of the things I'll read, this is a quote from their 10K. It says, "Our product offerings are comprised of varying levels of proprietary and third-party software. These product offerings are bound together with a common account management and regulatory compliance service and can be accessed with the same account and wallet. Across our product offerings, we have endeavored to own the technology in-house for any critical component and to utilize a combination of new technologies, including data science and machine learning, to optimize conversion and efficiency." In that small paragraph is so many things to do discovery on.
Yeah.
The first thing that popped out to me is, well, how do you determine what a critical component is? And what do you mean by in-house, owning something in-house? Does that mean you'll buy something, but you're going to own the scale out internally? You're not going to do this with the cloud? How do you think about that once I read that out loud?
I think everything what you're thinking of is, I have a million questions on first of all, level set with me what these words mean to you, because they might mean something completely different to you and me, but to them they've codified that vernacular into something that means something to them. So,
Yeah.
but if I had to guess based on the previous conversations we've been having, it's going to be building software from the ground up to make a betting platform, if you will, to attract people to it.
Yeah.
That's what I would think. Yeah. And some of that will be, building literally from the ground up, or pulling in infrastructure components to build on top of and build something quicker.
Yep. I think the other thing is like about their critical components, and they said utilize a combination of new technologies, including data science and machine learning, to optimize things. To me, those investments are expensive right now. Like, data scientists are still commanding high salaries. Machine learning is just getting off the ground in the mainstream. And so I wonder like how they're thinking about applying data science to the specific problems they have. And one thing that came to mind was they also mentioned the fact that they have, a certain number of monthly unique users coming into their apps. But as legislation starts to change and they get legalized in more states, one of the things they're going to need to figure out is like, how much revenue per new user are we going to get? What's the lifetime value of a customer? Based on the state, how do we go back to the street and give them some semblance of a target that we think we can hit? And these are all like very, I think, interesting data science questions. So if California legalizes gambling, how does DraftKings determine what kind of growth they're going to get year 1, year 2, year 3? I think these questions can be partly informed by data science, because the CFO eventually is going to have to get on an earnings call and say, here's what we're predicting for next quarter. So this is definitely a place where selling software into that organization is going to be like, this information is going to be very useful to have when you're selling into that department specifically.
Yeah, and I hear your point that data scientists are expensive, but like this is probably an industry where that money is well spent.
Yeah.
So,
Yeah.
given that small variances with gambling can be, kind of big swings up or big swings down, it's probably a good worthwhile investment.
Yeah.
But that doesn't mean like intelligent tooling can't come along and
Yeah.
help the situation as well.
Yeah.
So,
This
yeah,
is where you can probably use terms like double down in a meeting and people will know what you mean.
that's exactly right.
The other thing they put is like average monthly revenue per unique user is growing. And so they actually put in like from year over year, I think it's up to $51 per user right now.
Yeah, it grew from 30 something to 50 something.
So that's clearly an area where they want to see continued growth. And so an opportunity as a salesperson that's selling technology is like, how can you help them solve that problem? How can you help them continue to grow that? There's so much there to explore as well.
So much there, like from just user experience and not upsetting me as a customer due to little variances in performance of using your mobile apps or your web app, to engaging content that keeps me sticky, to the one passport thing sounds kind of nice. I get to hop amongst all your different properties and like not be bounced out to a login every time.
Yeah.
Sounds kind of nice. Yeah, there's a lot to unpack there, but all I keep seeing is speed to market, customer stickiness, customer retention, and probably some pretty high OpEx costs that they're willing to stomach to go out and get that land grab and get those eyeballs.
They have a huge marketing budget for sure.
For sure. I don't really follow DraftKings. I'm still more of a traditionalist. Like I'd like to sit down at a blackjack table and gamble. That's how I like to part with my money. But I do know them because they are on commercials all the time. I think they're even on some of the podcasts I listen to. I hear DraftKings commercials. So they're definitely putting that budget to good use.
Yeah.
For sure. Yeah.
Are they using celebrities to sell their product? I don't remember from the commercials.
Yeah, actually, Michael Jordan is a special advisor to the board of directors. So
Well, there you
they're
go.
definitely using celebrities.
Well, and that's a very strategic celebrity endorsement too, because of their NBA relationship. So I would not be surprised if that's part of the angle for marketing.
Well, it's also that the NBA and the NFL are their two biggest
Yeah.
sports right now that people
That's right.
bet on with them.
Yeah, that's right. I was thinking about this last night. Like I saw a celebrity endorsement for a product and I was like, you're basically saying if you're good at your job, then you can endorse my product. So how is that any different from me getting on a bus that's on time every day for a year and saying, bus driver, you're great at your job. What deodorant do you use? Like celebrity endorsements crack me up. It's kind of dumb.
Yeah.
From a tech point of view, I saw that DraftKings published a blog on the AWS blog, actually, and they were talking about some of their technology changes. Here's what they had to say. They moved everything to .NET Core because of the technological benefits, such as the ability for better efficiency with async all the way down. It also enabled a move to Linux containers and Kubernetes to get better cloud cost savings of flexibility and scalability. So I think that from a technology selling point of view, someone could read this 10K or read these blog posts and see, oh, they're moving to Linux and Kubernetes. We better make sure if we want to sell to them that we're Kubernetes ready. And our apps are come with Helm charts or whatever it is that they need to deploy into Kubernetes by default, because that's the technology that they've chosen.
Yeah. Yeah. I'm still getting used to as I get used to the ever-changing tech scene of hearing like .NET Core and Linux and Kubernetes.
It's so weird to think about .NET and Linux.
Yeah. I know Microsoft's been heading down that path for a long time, and I actually think it's wonderful that they've kind of opened up, and I think it's done wonderful things for Microsoft, but it's still a little bit of getting used to. Doesn't escape the fact that .NET is still a hyper prolific language and easy for rapid prototyping and getting stuff up and running. But then kind of mixing that in with Linux and Kubernetes, I just kind of find interesting. Interesting, good, but interesting. Yeah. So, but yeah, I agree. I mean, I'm often amazed at how much tech is leaking into 10Ks and investor reports. For an online company, I mean, you can almost consider DraftKings like a .com, or I don't know what the popular word is nowadays. But of course, you're going to assume there's a ton of technology behind what they're doing.
Yep.
Even the stalwarts like, healthcare and financial services, like in just about any 10K, 10Q, or my favorite, the investor reports, because they're a little more dumbed down and spoon fed to me. You will see a whole bunch of words like Kubernetes and like microservices and all these concepts bleeding into those reports, which I find fascinating. It's just really a poignant point that software is really enabling these companies in ways that it hasn't in the past.
Yeah, and I think to de-risk their investments, they're also trying to find the balance between choosing when they move to cloud, like choosing an ecosystem service that comes with Azure, comes with AWS, comes with GCP, versus finding something that's open source or off the shelf that will run on those cloud providers. I see this more and more in companies trying to make decisions about like how tightly coupled should we get to the infrastructure.
I've seen companies that have a stated, multi-cloud strategy, which is kind of how you hedge both sides, right? It's the old way of buying Compaq and IBM at the same time, so you can play one off the other.
Yeah.
But then I've talked to companies that have a single cloud strategy, and they're like, we're just going all in, and we're using all the things, and we're going to tightly couple ourselves, and we're not worried about that right now. I mean, that's a problem. We'll kick the can down the road 4 or 5 years and see what happens. But I would have probably been emphatically in the multi-cloud camp, but I'm surprised at how many times I see where people are not in the multi-cloud camp and are fine just picking a stated direction and moving forward.
I find that it sometimes depends on the business model or the vertical that they're in. So like the retailers obviously have I'd say a preference there. I think we all know what it is. You can infer based on what they sell, like the fact that they're a brick and mortar, click and mortar. But then there's other companies that have like exclusive licenses to sell things. And even if the cloud providers start to, spin up new content or a new channel of their business that would likely compete with that, if they have an exclusive license to sell something, then it doesn't matter, right? No matter what that company would sell, they have the exclusive license. And I think that's interesting for DraftKings too. The fact that they only have, as far as I can tell, one exclusive license means that competitors can seep in and try and steal market share in the other ones.
Well, I think that's only a matter of time. Well, like New York is legalizing things, and they're going to have just a couple operators who are licensed to operate. I mean, we don't know if DraftKings is going to be one of them, but there will be. It's not like a traditional tech space where dozens of different people could copy it and jump into the market.
Yeah.
Right? There'll only be a certain number of people who are allowed to do that franchise.
Well, and this is interesting because, of course, it seems like every day now there's a conversation somewhere about DeFi and blockchain and Bitcoin and things like that. But as this stuff starts to decentralize, that's going to get harder and harder to control. If any developer can just spin up a sports betting app and create their own odds, integrate with a payment provider, you can run that business in the shadows for a long, long time before you get caught potentially. So even though they have this idea of like, these are the only ones that you should be using, there's still going to be, I think, risks to the business from that perspective. And as the world starts to get more and more comfortable with decentralized things, this could also come into play in the future.
People will want to use regulated sites and stay away from unregulated sites. But we've seen examples of poker sites that were run out of some Caribbean island or something crashing, and everybody loses their money and nobody gets their money back. And it was just a totally unregulated situation. Or we know that there's been cheating and it was unregulated. So I think people will want to use the regulated sites where they can. Nobody wants to use their neighborhood bookie. Yeah.
Trust is a thing. When I'm betting against an algorithm, it's got to be trust, right? I gotta see the 6 decks go into the shoe. I got to see them counted out, right? Like there's got to be that trust. Otherwise, it's just good money after bad, and I'm not going to place my bet.
Right. I think everybody trusts when they go to a Vegas casino and the 6-deck shuffling machine is doing its thing. It's truly random, and it's not being shuffled in the house's favor. The game is in the house's favor. They don't need to cheat to win.
Correct. They just need to stay solvent long enough.
Right.
It's all about the long game. It's all about the long game.
Yeah. The long tail. Along the lines of this idea of, well, something like DraftKings, there will only be a certain number of players in each state due to regulation. But we talked in the last episode about Clubhouse and how fast they were growing and whether people could use that to potentially market to their customers or sell into the space that they're selling into. And ever since that episode came out 2 weeks ago, everybody's been jumping into this space. Spotify bought a Clubhouse competitor so they could jump into the live streaming space. Facebook launched a competitive tool for live audio streaming. Discord launched a competitive tool for live audio streaming. Basically, everybody's jumping into this space. And Clubhouse's valuation went up from $1 billion to $4 billion just between January and April.
Wow.
That's crazy.
Wow. Yeah.
And that boggles the mind even more because unlike a regulated casino type situation where the government only allows a certain number of people to compete, essentially guaranteeing them a profit, that's not true in these types of tech spaces. Anybody can jump into the streaming audio space. So how does it justify these huge valuations? I just don't understand it.
Yeah.
And it feels kind of Silicon Valley-esque here with Russ Hanneman saying, I put radio on the internet. That's what it reminds me of.
That's right. Yeah. Having just watched the WeWork documentary, this feels very similar to that as well. Like things can go up and then they come down just as quickly. So it's interesting.
Yeah, I mean, I don't think that we're seeing the sort of fraudulent activity that documentary was talking about with him lying to the public about how things really were. But these lofty valuations, I just don't know how it's supported.
Yeah.
And for a startup who only has an app that's on iOS only, whereas Spotify already has, I don't even know, tens of millions of users across every platform, that to compete against that, I think is going to be interesting to see how it plays out.
Yeah. And these valuations are so interesting to me too, because it's like, across what time horizon are you looking at to value the company from 1 billion to 4 billion in the matter of 4 months? Okay, let's get back to DraftKings and sales. One of the things I noticed that they called out in their 10K was about the fact that they do pulse surveys, and they put a section in there on COVID and their employees. I've noticed this in all the 10Ks I've read this year. They're making statements about COVID and how much they care. I do think it's interesting when you're a seller finding this out, that they're doing pulse surveys. You're probably in a company that's also doing pulse surveys. And some companies care about the culture of the companies that they're buying technology from. And having worked for Elastic and SpringSource, VMware / Pivotal before that, and now Grafana, I know that this matters to companies. Like, they want to make sure they're buying from a company that has similar values. I just thought that was interesting, is when you get up to the executive level, this can be a conversation that you might not be expecting to have, but it is definitely something that can be used to your advantage if you have alignment on employee satisfaction and core values and things like that.
Well, it's an extension of the fact that people buy from people they like.
Yep, that's right.
And if the culture is built around a certain way, then you like who you work with, and people that you like are going to go work at companies that have similar culture. So
yeah,
I think that's not altogether unexpected.
Yeah, I think that's fair. The other thing they mentioned was diversity, equality, and belonging. They obviously see it as important enough to put in their annual statement, which I thought was interesting too. So like every other company I've met lately, everybody's focusing on that, which I love. So that can also be something that, you can talk about in these executive meetings about how aligned you are values-wise.
The other thing that I see coming up a lot is reports on environmental and sustainability type things with respect to the company.
Mm-hmm.
That they all are putting things like that in their reports, and I just wonder how much that helps them get customers. Does being green help you get more customers? I mean, Google Cloud discloses carbon performance for data center zones to help inform customers.
Mm-hmm.
So they clearly think that this information is going to help them sell more stuff.
Yeah, it's hard to know if it's carrot or stick, right? I mean, people see the regulations coming. Chamath Palihapitiya mentioned on the All In podcast a little while ago about carbon offsets and things like that. And that's like going to be a wave that comes into the industry quickly. I just haven't put enough thought into it to know if that matters. But I would imagine that if I started a company today and I cared about that, it would be nice to know that you cared about that too.
It's also about retaining employees, and you have the younger generation coming up, and that's very important. Something front of their mind. They want to work for companies that are sustainable, responsible, environmentally sound, all of that.
Yeah. All right, Nick. So I noticed in their mission statement, which I always read first because it's always fascinating to me, the words that they use. They put in, I'm just going to read it out loud real quick. This is like the first thing in the 10K. says, our mission is to make life more exciting by responsibly creating the world's favorite real money games and betting experiences. We accomplish this by creating an environment where our users can find enjoyment and fulfillment through daily fantasy sports contests, sports betting, and iGaming. Now, the first two things that popped out to me were enjoyment and fulfillment, because those things are so qualitative. Like, how do you quantify that into a software sale? So I'm wondering, like, if you read that and you're going into this company to sell them and it's the executive meeting, like, how would you use that information to kind of create some rapport and have a conversation about that specific thing?
Well, I'd probably maybe even tie it back to a personal story or something where I could tie it into that.
Yeah, the thing that I thought of when I read that was SLAs, because nothing saps enjoyment or fulfillment out of an app like downtime and bugs. And so I was like, coming from a monitoring perspective, where I've been selling monitoring / observability for over a decade, those two words popped out at me. If I'm in the executive meeting and I'm giving the value proposition, like the business value assessment that we have done likely before we get there, I'm going to make sure I use the words in that mission statement. And I may even read the mission statement out loud in front of the group at the beginning of the meeting. So it makes it fresh in their mind, even though they're the ones that wrote it. And then continually tie back the fact that if my software does what I think it can do for you and what all your champions have agreed that it can do for you, it will actually tie back to your mission statement, which is enjoyment. That requires SLAs to be met or exceeded. So I think that's one way where I could use that right away. And you're using their words in the pitch back to them, which I think not enough people do, honestly.
Yeah, and I think you could look to see if there's been any outages, because typically that's very public.
I'll tell a quick story here. This is like, was almost perfect timing. So I was using a company's app where I was like doing the draft and NFL and, playing along fantasy sports the whole season of NFL. And I just so happened to be on the app making my picks for the week. And then on Sunday, when football was happening in the States, the app went down. And I was like, well, crap, I can't see my stats. Like, I'm just hoping that I'm doing well. It was down for a couple hours, if I remember correctly. Well, just so happened that I had a meeting with that same company 3 weeks later. And we were talking about that specific app that was powered by the technology that I was selling. And they mentioned the outage. And I say, yeah, I know, because I was trying to use the app when the outage happened. And I found out that the outage happened because they were trying to save money in the wrong place. And I was like, what's more important, adding a few more hard drives or trying to regain all the customers you may have lost on Sunday? And as soon as I said that, it instantly clicked in their minds. So it was like just perfect timing, but it was a good example of how this experience can lead to a technology discussion in a meeting where you're trying to sell something.
Just to riff on that a little bit, I think anytime you're interacting with a company, anytime you can experience as much as you can about how they interact with their customers, I think ultimately helps you in conversations. So from like food delivery, you could do a ride along with someone. You can call their customer service line. You can open a support ticket. You can open a trial. You could trial a service. And I think just having those experiences shows a lot of things. One, you're engaged and you're kind of in it with them, right? Because you're customer and partner at that point. But I think any time you can bring those experiences, it's super powerful. And I really think it gives you just more empathy for the problems that a company's trying to solve by going through some of those workflows yourself.
Chad, what's that like for you on the selling side, engaging with your customers' products, knowing where you work? You can't possibly engage with all of your customers' products, but there's just too much.
Well, there's one, I won't say which one, but the airline that I use most often, my primary airline, I've had them as a customer at a number of different prior companies.
Yeah.
And sometimes when I'm in a meeting, I'll drop that, oh yeah, I'm a million miler on your airline. I have lifetime status and all this stuff. And oh, that's awesome. They get excited by the fact that I'm one of their customers too.
Chad drops his frequent flyer number, just so when you're in those data stores, like if you see this number,
upgrades.
The way that I couch it when I bring it up is by saying, I want this project to succeed because I am one of your big customers.
Yeah.
And I know that when I use your app, I want it to work correctly and I want it to be really fast.
Yeah.
Yeah.
Yeah. I think that's really important. I read the news this week that EMC is spinning out VMware. And having worked for SpringSource that got acquired by VMware that spun Pivotal out, it just made me think like this is just a shell game that people are playing. It's like financial engineering. But I do wonder if, customers are going to change how they make decisions about VMware and EMC because of this spin out and like what they're hoping to achieve. There's what they say publicly, but there's obviously what they plan to achieve behind the scenes. And they did say that they're looking for more investment to, further innovate in the product, but I think it was fairly vague.
I see some positives to it, right? I mean, I haven't worked for either company, so I'll speak out of turn and you can correct me. But when VMware being part of Dell, maybe it was very tightly coupled to that like overall ecosystem, and maybe getting spun out actually breathes some more oxygen into VMware and partnerships that they could create with other hardware vendors and ecosystems and substrate cloud providers, all that kind of stuff.
Having been part of the Pivotal spin out, the other thing that was interesting is like that was a combination of companies. It was the SpringSource division of VMware, it was Pivotal Labs and Greenplum.
Yeah.
And that's 3 different cultures coming together very quickly, and they couldn't have been more different in my opinion. And then you have, the leadership kind of jockeying that happens. And it was fun to watch leadership at the highest levels not be on the same page about where the technology and the company was going. And, that was an indication to me that yes, there's a lot more thinking that needs to be done. But at the same time, as a person at the age I was then, I was not ready to go through that. I was like, yeah, I don't know about this.
Well, speaking of thought leadership, one of the articles that I think is world changing and is not really being covered by either tech news or mainstream media very much is China announcing their digital yuan currency.
Oh, big time.
And talk about something that has the potential to be a huge change in the world. And I just don't really hear people talking about it very much. I'm not exactly sure why. I'm not sure because they don't understand how big of a change it is, or it's still such a new thing that nobody really knows how it's going to play out, or maybe they think that because it's still a centralized currency and not like Bitcoin, it won't take off, or I'm not sure, but I find it fascinating that this is happening.
I agree. Given I think I woke up this morning to like talking about cryptocurrency bubbles. It surprises me that would not be a part of the broader conversation.
This is just me speculating. We don't know the U.S. government for being leading edge, bleeding edge technology adopters. We don't know them for being super thought leaders in, what the future of the world looks like. And to me, I kind of think they got blindsided a little bit. And so this was a surprise. And so one of the ways to not show your surprise is to just not talk about it because it'll be hard for them. I mean, we know with Janet Yellen now this is actually part of the conversation. She's mentioned a few times that they are thinking about this and talking about it, but we have no idea what's going to happen. And so with China coming out and just saying, this is what we're doing, I think there's a lot of people trying to move very quickly and figure out what we need to do in response, and they just don't know. If they knew what to do and knew how to respond, they would have by now, right? Especially given the last 4 years in politics in America and how adversarial it's become with China. I think it's just they got caught on their heels, honestly.
Coinbase did their IPO yesterday and got an $86 billion valuation. So I think that speaks to the future of this and the fact that why is this company able to get an $86 billion valuation? It's because I still can't do Bitcoin through my Chase account.
Yeah.
Which I think is totally crazy. Why can't I have a savings account for Bitcoin in my Chase account?
Yep.
Or anywhere else, right? Any major bank. Well, and because they didn't do that, now Coinbase is getting $86 billion of market cap.
Yeah. That's incredible.
Just to switch gears a little bit, I was listening to a podcast on Ethereum. Do you know what the non-fungible tokens and being able to digitally sign things and make unique things on the internet? I found that it blew my mind. Blew my mind. I think it's a fascinating concept.
So Nick, it's a great topic. Chad and I were talking about this. Chad basically shared with me that this thing is so broken that what's happening is people are buying an NFT in quotes, but what they're really getting is a URL that's supposed to point to this digital asset. Well, they don't control the digital asset. All they bought was the URL. And whoever owns the digital asset can change where it lives. So how do you actually control that?
But I thought there was a signature attached to it as well.
So the problem is that the people who created this idea of the NFT, it was just like an overnight hackathon project. And they were sitting here saying, well, whatever the digital asset is that you're going to own, a picture like Beeple's or whatever, it could be anything, it could be a video, it could be anything, right? We can't encode that into the blockchain because the blockchain won't support putting things that big into it. So what they did is, as a hack to get in this hackathon, to get it done, was say, well, we'll just have a URL, and that's what's going in the blockchain. So what you buy when you buy an NFT is you own the URL as far as the NFT is concerned. But so the hosting provider for that NFT URL could just go down. And when you go to look at it, you're like, my artwork is gone. What happened to it? I paid a lot of money for it.
So you're buying a reference.
Yeah. Pass by reference versus pass by value. It comes back to haunt us again.
Yeah, it's totally crazy. And of course, people are paying a lot of money to buy this stuff. I have no idea this is how it works. And people's NFTs are disappearing as a result.
Yeah.
Either way, the high level concept, I think, is a great idea. It sounds like the implementation is a little poor, but yes.
Well, so I think what it means in the end is that people are only going to buy NFTs from sites that they believe to have longevity.
Yeah.
And I want to see that URL come from Christie's website or, some very reputable art house that's never going to go away, right? Or huge companies like Amazon or Google could probably get into the space too and say, we're going to guarantee that this thing stays up. There was this tech news that came out last month. H&M had said something about the ongoing conflict with Uyghurs in China. And so as a result, China demanded that Apple remove H&M from Apple Maps. And so if you try to look up on Apple Maps in all of China, you will not find any of the H&M stores on the map.
Oh, interesting.
And I just find that, Google made a big deal out of saying, well, we're just not going to do what the Chinese government wants us to do. And as a result, they got kicked out of China.
Yeah.
And lost all its market share under their "don't be evil" type of auspice. But Apple here obviously has no problems just doing whatever the Chinese government wants them to do, at least from that point of view.
Yeah.
Which I find interesting.
It's tricky with China. I mean, as a software seller, if you're building a team, you have multiple options to go into China, right? You can work with partners that are there already and have a foothold. You can build your own team in China, which is really tricky because of the firewall and just how people engage with the team that's not in China and your systems. And then there's, if your software is amenable to running on one of the big clouds, you can develop a relationship with Alibaba, Tencent, and whoever else. And that's your go-to-market there. But China at the same time has these directives, I don't know what else to call them, where they're trying to get more and more people to use Chinese-based technology, Chinese-founded technology companies. And open source is interesting because, like, if you have an open source project that has thousands of contributors around the world and some of them are Chinese, is that Chinese software in their definition? And if you're running it on cloud, does that count? I think that's also an interesting thing about China as it relates to software sales. Yeah, and the answer is not clear, I don't think, to anybody. I've seen one opportunity where you go and build a team, and I've seen that struggle, quite honestly. And now we'll see how it goes with a new approach to just going in with cloud. But I think it's tricky for software vendors to find a strategy that works there.
All right, everybody, that's a wrap for episode 2. I want to thank our guests, Kyle and Nick, for joining. And if you're out there listening, please make sure to follow us or subscribe on YouTube, Spotify, Apple Podcasts, or wherever else you get your podcasts. And feel free to tweet at us. We are at Software in Blue, and we'd love to hear your ideas for future companies that you'd like to see us break down, and also any ideas that you have around tech news articles that you'd like us to talk about. So thanks again for listening.
Thanks, everybody. Thanks, Nick.